Welcome, and today we'll be talking about tips on the lending side and for saving you money when buying a home. So what is like qualifying credit and stuff like that?
So depending on the home that you're looking for, the loan product you're searching for, some people run into different issues based on where their credit is. So like let's talk about rebuilding and building credit. So for instance, when someone comes to me that's in the low 600s or mid 500s and above, some things I always ask them to do is let's go over your credit score, let's look over your credit report, see what type of liabilities, see what your minimum payments are, ask them what they have in the bank. If you're making perpetual payments consistently, even if you make a small one every single week, it shows stimulation in your credit. So therefore, even 20 points helps at the end of the day. Puts you in a different tax bracket of LLPAs, loan level pricing adjustments, which could save you money on the back end.
Okay, perfect. And then so for like down payments, I've heard a lot of myths out there, you know, how much do you need? A lot of people say 20%, but
so
it seems kind of high.
The average 20% would be somewhere they would be getting out of a PMI, mortgage insurance.
Okay.
The actual truth is that borrowers only need 3% down on their first time buying a conventional product and 3.5% with FHA.
Okay.
As long as they have money to cover their closing costs and their down payment, 3% is all you need.
And so does your credit impact that in any way, or?
Credit, DTI usually does not. Your DTI is 50% across the board, 43% usually, depending on the loan program.
Okay.
Things that affect your pricing, I guess, on a rate side would be, what is your loan to value? What is your FICO score? Do you have PMI?
Okay.
Right, essentially.
Right. All right, and then what factors actually determine the amount of your loan?
So the factors that would determine the amount of your loan would be, what is your down payment? What is your purchase price? What area are you in? Is it going to be a conforming loan? Is it going to be a high balance? Is it going to be a jumbo? I mean, obviously, the higher you go, the higher down payment you need, essentially.
Okay.
Once you leave the conforming loan amounts for that specific county, essentially you go into a different bracket and then a higher down payment is needed.
Okay.
I do have a question for you, because I'm sure you get questions all the time of like, no, don't pull my credit, don't pull my credit. So when getting an actual pre-approval, what is the real process? Because people always get worried that, lender's going to pull my credit and then I'm going to get dinged.
Okay.
And I know I've had a few people where they're like, well, I don't know if I'm ready yet. I just want to know. And so maybe you could have a little follow-up question of like, if someone's looking to buy, this year, how many months before they're really starting their search should they be talking to a lender?
So my answer to you for that is obviously the first thing I would tell you to do as a realtor is make them download Credit Karma. Credit Karma is not always on point at all, but it'll give you a roundabout range because we use your middle score.
Okay.
All right, so if you only have 2 scores that are showing and one's frozen, we'll take the lowest one. If we have 3, we'll use your median. So it'll give them an idea of where they're at and how to slightly build up. And then in regards to a pre-approval, I like to call it a pre-qualification because I make people send me all of their STIPs, their W-2s if they're employed, pay stubs, 2 most recent, 2 most recent bank statements, ID, and I kind of assess where they are and determine based off of their liabilities of what they tell me, and I kind of tell them where they need to be. So essentially, when I send out a pre-approval letter to either one of you or any other realtor, I mean it. It's not just like I just threw it together.
Yeah.
It's a pre-qualification. It's something to take seriously.
Verifying all their information, all their assets, everything.
Right.
Gotcha.
And then so what are different types of like loan programs? I know, not everyone's the same.
So different types of loan programs, that's kind of like a rabbit hole. But your basics would be essentially conventional would be your 3% down. FHA would be someone who is lower to mid 600s essentially.
Okay.
The Federal Housing Administration. USDA for your rural borrowers. USDA can go up to 100% financing, and if the purchase price is below the appraised value, you can go up to the appraised value and roll in closing costs. You can roll in prepaids, etc. Down payment assistance and first-time homebuyer programs. First-time homebuyer programs usually require some counseling, home buying counseling, which is Essentially, I believe it's like a 6-hour class. But down payment assistance programs range depending on the lender and what's being offered.
Okay, absolutely. And then, is there anything that you would like to add, anything for our viewers that you think might be beneficial for them and in their home buying process?
Make sure you do your research and make sure you get a good realtor and a good team behind you so they can fight for you in this
100%.
market.
100%. Well, thank you again for watching, and we will see you next time on Real Estate Snapshot.